What do you think is going to happen to interest rates as we continue to move through 2022?
Yeah, well, I wish I knew, because nobody knew that we were going to have a worldwide pandemic that brought interest rates down to those levels that you mentioned.
Right.
But as long as inflation is a concern, and you saw reports this week with inflation still running over 8%, as long as that's over 2%, anything more than that, and we're 4 times that,
yep,
you're going to have a rising interest rate environment. So I would expect them to continue to go up. What I encourage homeowners to focus on is that at least this week, we're still below the 50-year moving average. So rates are still good.
Yeah.
We're just a little spoiled by what we might have saw the last, 2 years.
How does an adjustable rate mortgage work?
Well, that particular one has a fixed period of 10 years. That's what I really focus on. So we want to ensure that the borrower has a nice, stable, consistent monthly payment for the first 10 years of the note.
Right.
Now, after that 10 years on your, payment number 121, it's going to start adjusting to wherever the market may be at that time. The type of adjustable rate mortgages I would ever recommend for someone are always going to have caps that are in place.
Okay.
So we could predict an absolute worst case scenario for a borrower in the adjustment period after the initial fixed term, to make certain that, we're not going to put them in harm's way and into any type of mortgage product that they might one day not be able to afford.
When you talk about an interest rate cap, how does that work? Some loans that are adjustable rate mortgages, they have no cap, and people should be looking for one that puts a cap on it, meaning maybe the rate can go up, but it can't go up any more than 2%, or I'm just making stuff up.
Yeah, lenders are going to think in terms of 3 separate caps that are on a loan. There's always going to be the cap that it can adjust the very first time. There's going to be a cap on how much it can adjust every time thereafter the first one.
Okay.
And then there's going to be a lifetime cap. And it's the lifetime cap I really focus on, because we know that's your worst case scenario. So if, for example, most lifetime caps are 5%. That's very typical. So if you started at 4%, lifetime cap was 5%.
You could go to 9.
Absolute worst case scenario would be 9%.
But, sometimes you need to keep a lender in check. And if you go to a lender and you get pre-approved, so let's say I recommended somebody and they came to you to get pre-approved, then we would typically ask them to get another quote or 2. Mm-hmm. And is that, if you were getting a loan yourself and you were not a loan originator, would you do the same thing?
I would. Yeah. Absolutely.
And then if someone gets a little bit better rate quote than what you have provided them, would the suggestion be for them to then give you that other rate quote and say, hey, we're already this far in the process. Is this something you can match? Because I would imagine in most cases you could figure out how to match something, and provided it wasn't a portfolio product.
Yes, but a step further, and what we see in today's market very, very often is that it's not really better. And because
but it's the way they're showing the numbers.
All the fees that somebody might be paying to obtain a particular interest rate.
No, and so, yes, that is such a good point. Thank you for making that. You have to understand all that goes with it, and that is such a good point. How much do I have to bring to closing, and how much will I owe every month after closing? Those are the numbers you need to ask.
Yep, and how accurately the lender quoted the third-party fees that they don't necessarily have to be responsible for quoting accurately, unfortunately.
Yep.
No. So you could have one lender that really tells you what to expect and another lender that kind of fudges the numbers a little bit to make it appear better than it is.